Josh, we're here to talk about the logistics market. You have been a seasoned executive. You are a seasoned executive, a veteran, some will say, of logistics. You were an early participant in sort of the emergence of modern freight brokerage, sort of the second generation. You're now at ITS. Tell us a little bit about how you got there. What's your journey like?
That's a good question. So thank you. First of all, calling me a veteran, I think that dates me. I think you just called out my age, so I'm not sure what I think about that.
I was told by Cindy Lee, she goes, we hire older people. And I said, well, how old is old? And she's like, 30. I'm like, I must be like ancient. So I think it's fair in freight brokerage.
Yeah, that's fair.
Have
That's
some
fair.
seasonality.
It's all relative. Well, listen, my journey is pretty straightforward. I spent the first half of my career in building smaller freight brokerages and subsequently selling them or transitioning them to new ownership. And so that was super fun, gave me a great opportunity to have a grassroots movement in this industry. And then as my career moved on, the second transition was into larger organizations. And I was very fortunate to go to work for XPO Logistics. And there I had the opportunity to be part of a run, a significant run from, at least for me, 2013 all the way to 2020, and enjoyed the run that XPO Logistics had until it spun off several companies. So I've got experience in small and large, and then following that, I spent 3.5 years building a tech company in Silicon Valley, which was focused on industrial commerce, and then also back-end supply chain. So think TMS Lite, think import easy button, think complexities for foreign-based manufacturers trying to grow their brands in the United States. So super fun there. Sadly, that journey came to an end, but I was very fortunate to meet the leadership at ITS Logistics, and I've been there for almost a year, and I'm having a ball.
You were part of, in 2013, XPO. It was a small company that, relative is everything's relative in this world.
Right.
But compared to what we know it is today, this is sort of early in Brad Jacobs' introduction into logistics or participation in logistics. You have seen companies, and that XPO grew exponentially through acquisition as well as some organic growth. You've seen companies grow. You're now at ITS, $1 billion logistics company. What specifically about ITS is interesting to you?
Well, several things, but I'll tell you, first of all, what attracted me to the organization, and starts with culture. People talk about their companies and, oh, we have an amazing culture and we have great people, but we have the best. At ITS and the leadership there, I think take it a different level, and they look across the table from one another, and they say things like, I'm putting my future in your hands. I feel accountable for your success. And so those deep-rooted DNA elements are powerful, and they are intentional, and they're meaningful for a growth business. And so that was the biggest attraction. But really, some of the growth is driven by people, but then also having the commitment to growth and invest in the business and invest in different ways, whether it's capacity, technology, or further investment in the people. That's what's making it grow and making it different.
You talk about people a lot. This is a part where I think logistics generally gets a better grade than trucking, asset trucking. As we heard the OIDA debate, the driver shortage debate. Logistics companies have invested a lot in people. This is sort of core and function. One of the conversation that's coming out in the logistics circle is offshoring or AI and eliminating potential positions to allow companies to grow. How are you guys thinking about that?
Okay, so let's break down the resourcing of talent, and then let's talk about technology and AI. Fair? So first of all, from a resource standpoint and building a business, we firmly believe, and I am absolutely drinking the Kool-Aid all day, of we are empowering futures. And we are empowering futures for individuals to maybe have, successful careers much like yours, or people that are around you, but really investing in those people that we can see every day. We have very much a in-person culture, and there's a strong belief that we're much, much better together, and we can get there faster when we're together. So today, we feel strongly about seeing everybody and developing the people inside our offices. As it relates to technology, look, this is pretty interesting, right? So when you think about tech today, there's a lot of development and a lot of focus on displacing the human being and displacing the culture and the talent that we just talked about. And I'm not saying that these technologies aren't fantastic and they're fabulous and they're smart. I'm the first one to be a subscriber to that. But there's a slight nuance and difference to building technology that makes people better, that makes them more efficient. And I'm not talking about just like one extra load a day or 2 extra loads a day. I'm talking about the experience, the capability. Are you teaching them then? Are you teaching them anything? And are really doing anything differently to better them as a professional? And so today we aim our technology development just in that area.
In empowering the people.
That's right.
And helping them grow their careers. We've seen so many freight brokers scale up over the last decade where they've taken so much portion of freight. Is it your contention that the most successful ones are the ones that make those investments? Because there are times when that isn't true. I mean, I'll say it, as TQL has a reputation for doing the opposite, but has built a very successful business. How do you differentiate the ones that are able to grow without those investments versus the ones that are?
Well, I think that I think the word investment, first of all, sometimes is misunderstood. I think when you consider, you use an example of TQL. If you use the investment that they take in people and bringing people into the organization and the training they put them through and the mentorship, that's pretty significant investment. Secondly, people don't talk enough about, or it doesn't get enough airtime, rather, the TMS platforms that they build. There are very, very, very sophisticated TMS platforms out there, whether we're talking about brokerage, whether we're talking about managed trans, but there's investments that they put in their business that they use every day, just like we do, but they don't get the airtime because they don't have the whiz-bang approach to, having the limelight of different technologies. So the point is, they're making the investments. I think you just don't hear about it.
Well, I think the counter that I would say is that they have a reputation for not treating the people that work in the organization well. And I guess my question would be, they have been successful in spite of the reputation, and yet if the investment is in people and what you get out of them, where is the real differentiator for a business like ITS?
For us, look, our model is significantly different than theirs, but the differentiator for us is it is probably a slower burn and a focus on quality and on the future. It's the approach that we have today probably has a narrower scope on customer base. There is a customer profile that works extremely well in our model, and it's fabulous for some, and for others, it's not a great fit. So it continues to beat the drum extremely well when we focus on that customer profile.
You guys have built a model that I saw in the asset side, the large asset enterprise carriers, that was more common than I've seen in logistics, of really building dedicated teams to a single customer. Talk a little bit about why you're doing that and what that brings from a value standpoint.
So, for starters, if you're looking at the opportunities to serve and to partner with organizations and take responsibility for their supply chains, you have to put in the effort and the detail for excellence. It cannot be about simply moving a few loads. It cannot be just a transactional approach. Our view is that if we make the partnership, if we create a partnership with an organization and then we further invest in that business and in that partnership with people, with technology, and then potentially assets, it works extremely well because it is a true partnership and it is affecting details of their supply chain versus just moving a few loads and hopefully we can build a business living off the spread, buy versus the sell. It's just a different approach.
And it's a long-term investment in
100%.
the success of that client.
100%.
So much conversation at our conference has been around the sort of change and reorientation of the industrial economy in America, the growth of reshoring of industry. You worked in a industrial supply chain startup. What's your general view on sort of the direction of the U.S. industrial economy?
You know, I think it's interesting. I think we'll see what happens with we'll see what happens in government. We'll see what happens with tariffs. I think that there could be some resurgence in the industrial manufacturing sector, but I don't think it's broad. I think it's going to end up being specialized. I think there will be verticals with specificity that have tailwinds, and they move very, very quickly. And then in other sectors, I think that they'll probably lag. I don't necessarily know exactly which ones those are, but if you think about, you know, some areas where you're seeing manufacturing being installed, you know, such as EV, I think that will be certainly an opportunity for the future.
The freight economy, I have come out publicly and talked about the great freight recession has come to an end. Yeah. There have been different, you know, there have been some counter views on that last couple of days, but also in the market. There's also been, I think, affirmation of that. It's interesting to sort of get we did a, call it non-scientific poll yesterday, and I think about 60% of the audience felt like the great freight recession was over. 40% wasn't there yet, if at all. Where is your head at on it? I mean, you've seen multiple cycles, and I think that's actually one of the things that's really interesting about people who have been in the business, is we all know the cycle rolls over eventually, but where's your head?
Yeah, my head is, one, I'm still trying to finish the year strong. I would love to skip forward just to 2025, but, you know, I've got a job to do. So, but if I think about the future and whether or not, you know, the freight recession is over, look, you can see the signs that things are changing. They're absolutely changing. If you watch close enough, they're changing. Are we completely out? I don't know. I guess the question really is, maybe we're not talking about is, okay, fine, if it's over, what are the effects? And when, right? When does that happen? And then what does it look like? From my vantage point, we have a lot of work to do. We still have a grind in front of us for several quarters. And, you know, even if that, there could be this notion that it's a new normal. Like, there's not a hockey stick on the other side of it. Anybody believes that there's just this hockey stick, well, that'll be because something happens and most likely artificially affects the market. So I'm not a buyer on that side. I am a buyer that analytics would say that there are changes ahead. We have a long ways to go. I do think that we are at the bottom. What it looks like on the other side and how we come out of it, I think it might be slower than people want to believe.
It was an executive, and I won't call him out because he thought this was a non-PC term, who runs a freight broker. He goes, this feels more like a handicap ramp. Slow and gradual versus a shot up. I was like, I don't know if that's like anti-PC. I think you can say that, but it is a good description because I think it's different than what perhaps folks that haven't been in the industry have experienced. One of the things that I find pretty astounding, ITS has been around for some time, you have been around and seen different iterations of companies. Seems to be a clear difference between people and companies that have been seasoned versus some of the ones that haven't. You had the opportunity to go join some of the, high-profile digital companies. You decided to stay true to the industry. So what do you see about the sort of these hot, flashy companies versus sort of the traditional players that have infrastructure?
That's a good question. So I guess it all comes down to how are you adding value? How are you adding value to the companies that you're serving? And if it's a freight brokerage, you've got two customers, right? You've got customer one and customer 1A, right? But how are you adding value? If it is merely you are an intermediary by way of technology, and you have a platform and there's an exchange and you're very nifty on the back end from an administrative standpoint, pay your bills fast, those sorts of things. I mean, that's one flavor of value, and to each their own. For me, I've kind of seen the light of, can you solve complex problems? Can you solve complex problems that require some level of investment in either assets or people or technologies that resolve problems that shippers are trying to get off their desk every day? And having faster transactions and more volumes of transactions for small spreads or transaction fees, that's not the same thing. You're not solving the same problems. It's amazing with all the technology is out there today, organizations are still looking to solve fairly complex supply chain problems. And frankly, I don't think transactional execution on a platform, I don't think it solves it for them.
What has changed in your time since you first started to where you're at today in the industry, in terms of how the issues customers are dealing with?
Well, for starters, I can tell you that manufacturers or anybody that's buying freight is way smarter than they were when I started. The information alone is just amazing. The fact that companies and some of our customers are coming to the table every day and they want to talk about market, and they're informed. They're informed about where price is. They're informed about where price is going. If you think about if the freight recession is over, we have customers today in active dialogue that says, okay, well, if it is, what does that mean for 6 months from now, 7 months from now? How does that affect my capacity? How does it affect my price? How does it affect my service? Those are conversations that we weren't having 20 years ago.
Information was
right.
Not, it's our effort, it's others, it's data platforms, it's social media.
Right.
The conversations being had, I remember when I first started FreightWaves, the idea that there was a freight market. The idea, people go, what's a freight market? And now it's, I think people recognize that it's a commodity that's quite volatile. As you think about, I think you've given sort of I'll call it a neutral answer, if that's fair, in terms of whether we're out of the freight recession or not. I don't know whether you would have raised your hand or not based on your answer. Because you have some level of uncertainty into next year, how are you thinking about bidding and pricing? Are you guys leaning into recovery, or are you being cautious in terms of how you build your freight?
Okay, so through that lens, cautious means I'm still living through the view of today versus what might be tomorrow?
Yeah. How are you guys handling that risk? I mean, Doug Wagner talked about effective short squeeze in the market. If the market conditions turn and they're underwater on contract, that is expensive.
It is expensive,
So how are you guys thinking about addressing that?
but it's a risk that anybody in this business takes consistently, right? I've long believed that this business, or the brokerage business rather, sometimes should be really viewed as a trader, because in many cases you're taking a position in the market and you're either selling it off, and sometimes you win and sometimes you lose. But for me, I feel like I've built a career and I've driven teams in a way that says, we're going to solve for the problems in front of us today, and manage it effectively that way. We understand that there's risk involved, but that's what we do. We take risks, and we manage the outcomes effectively for the customers, and then see where it leads us.
So Josh, before we go, bold prediction for the next 5 years for ITS, and then I'd like for you to talk about the industry.
Sure. Well, for ITS, look, we've had a tradition of growing, even in these last couple years of freight recession. Look, we've grown volumes 20 and 30% over the last 2 years, and so we're going to continue to do it. We're going to continue to beat the drum. We're going to continue to focus on our brand and our style of building this business. It has served us extremely well to this date, and will continue to do so in the future. As for the industry, I think it's always an interesting time, right? I'm curious to see, Craig. I'm curious to see if we add a level of sophistication to price and predictive pricing, and if we adopt any sort of strategies on that front, specifically on the shipper side. I would love to see us get there, because I think there's opportunity.
Indexing contracts or something like that?
Yeah, something
you
like
unpack that for a second?
If you want to, let's do it.
So indexing contracts, you worked on this many years ago.
Many years ago, yeah.
The innovator of this, of a floating price. And the floating price is set by an index, and you essentially have the index is updated every day. The price that the shipper pays is based on a reference price of the index.
That's right.
Do you think that we will see those days come?
I do. I think eventually.
Are you doing it now as ITS?
We're not doing it now. I would love to. We have customers that are sophisticated enough in their businesses, from a leadership standpoint or from a finance standpoint, that they understand the conversation and they want to have it. But from a mechanism standpoint, there's really not a neutral platform by which to trade. So until that point, I don't know that it's super realistic, but I think we can inch towards.
There is a floating, we have a couple dozen clients that are using indexes. They're not trading physical commodities, but they are using, just the same way trucking companies buy diesel, as they are using reference prices to do that.
Yeah, I think it's an evolution, Craig.
Yeah.
So if we think that we've been solving for, we started with TMSs, we started with managing our ability to manage transactions better. Then we started displaying, those types of elements on screen. We started showing a truck going across the street, and then we were showing a boat. And those platforms are getting more sophisticated. Now that you have fraud, and that's getting more sophisticated in our attack against it, there's only so many levers to pull now on continuing to evolve our space. And at some point, price has got to get there.
Yeah, price feels like a frontier in some ways. Well, Josh, unfortunately, we don't have time with so many other things that we could have talked about. I do appreciate your time today.
Likewise.